Welcome, everyone, to the Firing the Man podcast. Today's episode, David and I are going to discuss why sales channel diversity is crucial in your e-com business. We're going to share some recent stories from our own businesses, some good, some really bad. We also dive into how having the right sales channel diversity can actually make you over $200,000 if you plan on selling your e-com business. David, welcome to the show.
Thank you. Good to be here. And Ken, I'm really excited for this episode. You know, there's a common saying, don't put all of your eggs in one basket. And boy, does that ring true.
Yeah, absolutely. Question for you. Can Amazon shut down your business with one stroke of a key?
Oh, yes. Yes, and it has happened. I am lucky, knock on wood, that has never happened to me. But I have been in several masterminds and several Facebook groups where I've heard examples of this. And the unfortunate part about this is the people that got shut down were not acting in a malicious way. They may have done something against the terms of service that they, unknowingly violated the terms of service. But at the end of the day, their account was shut down, and some of them got them reactivated, and some of them didn't. And that's scary. That is scary.
Yeah, absolutely. So, kind of digging into our journey. You and I, both started our business, 3-4 years ago, and started on Amazon. Like we discussed, a native Amazon brand, right? Start a business, build a brand on Amazon, and then after a while, realize, this is single-threaded. This is not good, because if you have one sales channel and it gets shut off, you stand to lose everything. So, one example, and I just kind of want to, this is just hypothetical, just kind of bring awareness to it. Let's just say, for example, Nike, one of the biggest brands in the world, right? Let's just say Nike, they only sold on one channel. And let's just say that channel is Target. Now, these are hypothetical. I don't even know if Nike sells in Target, but let's just say that that's the case. And, let's just say the CEO of Target decides, I'm going to take a political stand, or I'm going to speak out on this cause that I believe in. And let's say, 50% of Target shoppers boycott them. Well, Nike, who sells on that only channel, loses half of their sales. Nothing in their, not even in their control, right? Another example, let's say, Target has a data breach and they lose customer trust. They lose 90% of their sales. Guess what? Nike, they only use Target for that sales channel, and they just lost 90% of their sales. So the point is, it was no fault of Nike, right? The only fault that they had one sales channel. So they were single-threaded for the sales channel. Not good. A couple of, I want to go into, often in the e-commerce space, we always hear about all the good stuff that happens with, and hey, selling on Amazon, doing this, doing that, and you never hear, the bad stuff. So today we're going to talk about some of the bad stuff, right? So for me personally, it was about 2 months ago, I got an email from my VA that said, hey, this sales channel has had 0 sales and it's noon. Like, something's going on. So I went and logged into this Amazon seller account, and sure enough, I had the little red flag under the red flag for the performance, and I clicked on it, and it said something about I was missing a form, some kind of a tax form. So I want to back it up a little bit and say a month prior I enrolled in, actually it was in a few months prior, I enrolled in Amazon's remote fulfillment program. So basically I went into Mexico and Canada through the inventory in the Amazon US warehouses. So it was my Amazon.com account. I just allowed Amazon to sell that inventory in Canada marketplace and Mexico marketplace. However, there was some kind of a loophole where I didn't file this form for .mx, and ultimately Amazon shut down my entire US.com account because of this. it was completely out of my control, nothing I knew about, and was, kind of ridiculous at that point. I lost thousands of dollars, and I was able to get the account turned back on within a few hours. I called and was like, hey, I basically shut that remote fulfillment off, and, was able to bring the .com account back up. But, I just kind of wanted to go over that real world example of, I lost one of my entire accounts over a missing piece of paperwork that was not even relevant.
Yeah, absolutely. I have a similar story. Fortunately, it wasn't on Amazon, which is my primary sales channel. It was on Groupon. And I had just signed up for Groupon, and things were going great. I was getting orders in almost daily. And one thing that you were required to do was to take the tracking number and post it when you put shipped. You needed to manually add that tracking number, and I didn't know that, and I didn't do it. And after not doing that for about 10 orders, my account got shut down. And that was a mistake on my end. I didn't read the terms of service, and in hindsight, I actually got a couple emails that I just didn't read, and that was a mistake on my part. But that was an example of something that negatively impacted my business, and it wasn't intentional. I wasn't acting in a malicious way. I didn't read all the rules. You get busy and that happens. And so, that fortunately, I did have Etsy going at that time. I was on eBay and I was on Amazon. And so it didn't hurt the business as much. And so, Ken and I share these stories because oftentimes, especially in this space, people like to talk about success stories. And oftentimes those success stories are riddled with many stories of small failures like this.
Yeah, absolutely. And I would be willing to bet that almost any success story has a pile of trial and error stories behind it, right? Like that's how you learn. And being an entrepreneur is a roller coaster a lot of times. One more story I'd like to share. And this was pretty recent. This is just a few weeks ago. And I recently took one of my brands onto Etsy. And just a few weeks ago, I got an email. Actually, I got a screenshot from my VA, sent it over and said, hey, the Etsy store is shut down. And the screenshot basically said, yeah, your Etsy store has been shut down. No, you can't log in. And I was like, well, okay, well, let me go and let me call Etsy. Let me find out what's going on. Go to Etsy's website. There's no customer service line. And it basically says, if you can't log into your account, reset your password. So I went to reset my password and it says, your account has been disabled. You cannot reset your password. Okay, let me find a phone number. Let me call Etsy. No phone number, no customer service. So I scratched around, did some Google searching, and I found, actually I'll put it in the show notes. I found an email to Etsy, and I emailed them and was like, what's going on? My account shut down, got disabled. Can you please explain why? I got a reply about 2 hours later, and it said, your account's been reinstated. There was a mistake, and everything should be good to go. Please let us know if you need anything else. Go back in, log into my Etsy account. Everything's fine. And, it's like, it just goes to show you that, there was no fault. We didn't do anything wrong. We didn't violate terms of service. We didn't do anything. There could have been an intern working at Etsy that, shut it down. There could have been nefarious activity. We don't know. It was out of our control. Entire sales channel went down. Boom. Like you mentioned, it was Etsy is still an up and comer for us. However, we do see a lot of good things with Etsy, but it wasn't a massive hit, but it could have been, But the point is, like, an entire sales channel went down for no fault of ours, So it's yeah.
As we're going through this list of failures, a couple more come to mind, and one that I'll share with you, and this has probably been my biggest oh shit moment. I got an email about this new program that Amazon was rolling out called Amazon Zero, and it was supposed to prevent people from hijacking your listings. And I, read the first couple sentences of the email and was like, oh, it sounds great. And I signed up for it. And when you enroll in the program, you get, it was probably 3 or 4 pages that just kind of explained how the program worked. And I stupidly did not read those instructions. And there was a spot where you could, what I thought, you could enroll your ASINs in this program. And as it turns out, this program was, if you had someone hijacking your listing, you take their ASIN and report them. And so what I did was I took 300 of my ASINs and I reported myself. Mm-hmm. And all of those listings were immediately shut down. And I had a couple days of 0 sales. I was on the phone with Amazon for several hours, and I felt like such an idiot because after this happened, I did go back and read the directions, and I'm like, oh, I totally misused this tool. And when I'd call, they'd say, why would you report yourself? And I was like, listen, I didn't read the directions, and this is my own fault. And fortunately, I got someone on the phone that helped me reinstate my listings, but that was a couple $100 at that time of profit that I missed out on, and not to mention losing ranking and everything else for having my listing shut down by something that I did to myself.
Yeah, that's that just goes to show you, some things that are in your control, some things that are not. But either case, it takes an entire sales channel down, right? So having other sales channels functioning, they kind of mitigate that.
One thing I'd like to dive into, I noticed that when you were talking about your one of your Amazon sales channels being shut down, when I listened to you say that, I can infer that you have multiple Amazon accounts. And I think when we're talking about diversification, that's not a bad place to start if you have 2 different brands or if you're thinking about starting a second brand. And so can you talk about why you did that and some of the benefits, but maybe also some of the downsides?
Sure. Yeah, there are both. And, one of the reasons I have 2 is I want diversity, right? The whole thing is firing the man, right? And I need to have diversity. So if one gets shut down, I have another one. It was pretty easy to set up. You just email Amazon, say, hey, this is me. I'm opening a new account. I want to open a new account to sell a completely new line of products and service different customers. They will allow you. I mean, as of right now, today, they will, but they want to know. If I would not recommend to go open one without emailing them. So that's the process. And if anybody wants the template, just email the show and I'll send out the template that I used. So the downside of having 2 is that some of my softwares that I use, I have to pay double the price or an increased price. And a lot of them are compatible with multiple accounts, but some of them I just have to have two accounts, which is double the fees, more expenses. So that's really one of the only downsides, I would say. It's a lot, you add complexity. As we get into, later on, the downsides is one of them is the more channels you use, or depending on what channel you add, it adds complexity. So there are some the benefits far outweigh the negatives, in my opinion.
What are the upsides of having sales channel diversity?
So good question, David. There's a lot of upsides on having multiple sales channels and being diversified. One of them that I can think of, it impacts me directly, is like you sleep better at night. You know how it is when you get a sales channel that completely goes down, or if you're relying completely, your livelihoods on one single channel, and you've ever had it go down, like you have that in the back of your mind, like, oh shit, like what would I do if this happens? You might lose sleep. So having diversity, you're gonna sleep better at night. It reduces the risk of losing your entire business if one channel gets shut down. And as we discussed earlier, it probably will happen to you at some point in time. You can reach more customers and increase sales velocity with every new product launch. So if you have 5 sales channels and you launch a new product, you will likely launch it on all 5 sales channels, right? So it just kind of it adds that incremental increase just by having more sales channels. Another one is, you can reach new customers on sales channels where they're hanging out. What comes to mind is we did an episode previously, and you had mentioned the shoppers on eBay from the 90s, right? So if you add eBay into your sales channel diversity mix, you're going to add all the shoppers from the 90s. You're going to reach new customers that maybe those customers aren't on Amazon. So you reach new customers. One of the last ones here is, you can increase the sales price when or if you sell your business. And I think this is this is the main one for me, one of the main ones for me. And it's why one of the reasons why I'm going through adding all these sales channels, and I'm sure you are as well. And I've got some numbers here. I kind of want to go over a hypothetical exit of your ecom business. We're just going to use some rough back of the napkin math here, and all hypothetical, but it's relevant, and numbers always help me. So let's say, for example, let's say you have a business and your top line revenue is $1 million annually. Okay, let's just say roughly your bottom line net profit is $150,000, or 15% of your total revenue. I think it's a pretty good rough estimate for most ecom businesses that I've seen. Let's throw in some ad backs, paying yourself a salary and whatever ad backs you can find. Let's $50,000 for ad backs. So that would give you a trailing 12 months of SDE, or seller's discretionary earnings, of $200,000. Okay. Now let's take a historical marker with ecom businesses, the multipliers. This is very general. Let's just say it's a 3x multiplier on your SDE. Then that's before Uncle Sam and brokers take their fees. But you would have a $600,000 exit. You have a $200,000 in SDE with a multiplier of 3. That's $600,000. Not bad, right, David?
Not bad.
Now, let's take that same business, and the one we just evaluated, they only sold on Amazon. Okay. Now let's take a business that has 5 diverse sales channels, and they have a top line revenue of $1 million. They have all the same numbers, but they have 5 sales channels. And for example, let's say they're doing 40% of their sales on Amazon, 25% on their Shopify website, 20% Walmart, 10% eBay, and 5% Google. Okay, pretty good mix, right? That business is going to be valued higher, and let's say hypothetically that multiplier goes to a 4x. It has less risk for the buyer, right? They look at it and say, okay, well, if one of those nightmare scenarios happens like we went over earlier, we still have these other 4 sales channels. So with seller's discretionary earnings of $200,000, like we discussed, and a 4x multiplier, your exit's going to be $800,000. That's $200,000 more than a single threaded Amazon business. That's a huge upside.
Huge. And one thing I want to point out is that company that you're talking about has the same revenue. It has the same profitability. It's just a different scenario for your exit. And, in this industry, that's a really good example, Ken. And one thing that I want to point out is that $200,000 extra that you get at exit is for the same company, right? In this example, they're going to earn the same revenue. They're going to have the same profit margin. The only difference is that they're diversified across sales channels. And in this industry, typically, the market rate for an exit is between about 2 and 5. 3 to 4 is a typical multiplier for an e-commerce exit. And what determines that multiplier are things like diversification. email lists, other brand assets, intellectual property, and to the extent that you can move up on that range of multipliers for your exit, you're just going to make more money at the end of the day. And so, not to mention that you're going to sleep better at night. If one of these gets shut down, you're still going to have cash flow coming in. And, as we talk about this conversation of diversification, the main point that we're trying to drive home here is your sales channels can get shut down. That does happen, and it happens, I don't want to say a lot, but, there are plenty of examples of this out there. And if you look at your business, there are a lot of fixed expenses that you have every month, and those don't stop if you have a sales channel shut down. So for instance, all of your software subscriptions, any employees that you have, you need to pay them regardless of whether you have an active sales channel or not. And so, when you have 100% on Amazon, that's a huge risk. And you really, if you're evaluating this, yes, there's going to be some legwork in setting up these other sales channels. But look at your financial statements and see if you could survive 3 months if your Amazon sales channel got shut down. I can say in my own business, the answer is no. And that is a good reminder to me to continue diversifying and ramping up my Etsy, ramping up my eBay, maybe getting back into the Groupon game.
Yeah, absolutely. No, that's a great point, and it's going to be one of the goals that I challenged myself for in 2021 is to, I'm going to put some hard numbers on these, on the percentage of the pie for my sales channels, and I'm going to really challenge myself to do that because it has a lot of upside. So I have a list here of sales channels that that David and I use, and that we're also on a roadmap to test. And before I get into that, I want to kind of go over some things to consider before racing out and just adding a bunch of sales channels. There's some things you need to consider. One of them is complexity. By adding a sales channel, how complex will it be? Is it automated? I mean, does it plug right into your current system, your software? You have to consider that. And what's the upside? Are you going to get 10 sales a month and it's super complicated, or are you going to get 50 sales a month and it's seamlessly plugs in? It's complexity is one thing. Automation. If I recently added some software suites in where they do sales channel aggregation, and check your software suites. Does the sales channel integrate seamlessly in and automate order flow and reporting and things? Something to look at. We discussed earlier, sales, right? Like if you're going to add a sales channel that it's going to get 2 sales a month, is it really worth it? If you have a potential to get 1,000 sales a month, the risk versus reward, you have to think about that. Liability. You look at the sales channel. Is it going to add a liability to your business? Sales tax complexity. That's huge. We've discussed it a couple times, and the whole nexus, the whole tracking, and you got to look at tax complexity on that. Commission. We talked. David and I are huge fans of Etsy. That 5% commission. It's a lot better than 15.
Yeah.
So you have to look at that too. And lastly, and probably one of the most important things that are on this list, are my customers on that channel? If you're selling, I want to come back to that eBay thing, right? If you're selling, products designed for millennials, they're probably not going to sell well on eBay, right? Who's on eBay? The 90s generation, right? And this is hypothetical, but you get the point. Are your customers on that sales channel? So yeah, that kind of covers that. So we'll get into the list of sales channels that David and I use, and the sales channels that we're on the roadmap of adding, and then some other ones to consider as well. So the main sales channels that David and I are using right now are Amazon, eBay, Etsy, and Shopify, WooCommerce, Walmart. So those are the channels we're using now. I am adding Walmart soon, and I'm adding Google Shopping, cleaning it up and getting it integrated. Some other channels that I want to go through, and this is often overlooked. I actually overlooked this earlier and then I regrouped, and so other Amazon marketplaces. That's another diverse sales channel, right? So if Amazon.com gets shut down, Amazon.ca is still there. It's a separate channel. So Amazon Canada, Amazon UK, Amazon Germany, Amazon Japan, and Amazon India. And those are listed in order of sales velocities. So those are separate channels, and might be easier to plug one of those in than to add something else, right? Your upside might be worth it. And we're actually going to have a guest on the show pretty soon that's going to cover those in really in depth. Super excited about that. The last couple sales channels are Rakuten, Facebook, Pinterest, Groupon, and Instagram. It kind of wraps up the list. So if you're looking at adding sales channels, check the list out. We'll have this in the show notes. And David, any last comments?
Yeah, as we go through here, one thing that you've really encouraged me to do, which I'm glad, is to really take ownership of my Shopify store, my own website. And one thing that I think separates your own website from some of these other third-party marketplaces is that you are likely not going to get kicked off, right? You're the boss there. You don't have terms of service to live by, and so that is something that I think that there's benefits there in that there's just less risk. The other thing is that they're your customers, and you can get things like email addresses. You can then retarget them through email campaigns or through Facebook ads, and I think that is something that, had you and I not met and we had not had those early discussions, I don't think I would have placed as much emphasis on my Shopify store. But that's something that all of your brands, you do have a website and a strong website, and you're starting to see some traction there. And in my opinion, one sale on your own website, from a profitability standpoint, may be worth 2 sales on Amazon. If you look at the cost of customer retention, what you can do with their email address, and all of the other benefits of having someone come to your website, I think that one really stands out in this list, and I just had to mention that because that's been something that I've done in the last year, and I'm really glad that I have.
Yeah, no, absolutely, and I'm proud of you for adding that. That's going to be paying dividends for you in years to come. And another thing also is that there's no commission on your own website. So we'll do some more shows later on, and some strategies that we're using to drive traffic. But yeah, like you said, at exit, your website is an asset. Your email list is an asset, and an investor looking to buy, if you have a strong web presence and you own that, it's going to pay dividends. So